All right, exercise 612 is another one of these bank reconciliation problems. And hopefully, if you've watched the other two videos, you see that maybe the book made this a little bit more complicated than it really is. It really isn't all that difficult. It's just a lot of this is new concepts and new language. Uh, okay, here's the deal. The bank knows about some of the stuff going on, and our accountant knows some of the stuff going on in our cash account. The reconciliation is just to get the two to match up. Okay, and learning terminology, like up here, it says Nicholson Company has unadjusted cash balance. Okay, the unadjusted cash balance is what our internal records show. So the unadjusted cash balance, that's internal records. And if we go to the unadjusted bank balance, that's what the bank is reporting. All right. So some things that have hit, most of the stuff has already cleared the bank, but some of it hasn't. Some of the stuff we are recording in our accounting statements, but we haven't heard all the stuff from the bank. Okay. All right. So if we start with unadjusted cash balance, 7 million, 7 million. Yeah, I got millions on the brain. 7,750. That's what they're calling the unadjusted cash balance, all right, which is basically what the accountant says. That's the bookkeeper really says that, okay, our books are showing 7,750, and let's see what else is in there. When we got the bank statement today, we see that there was an NSF check. That's a check that bounced. Somebody wrote us a check for 72 bucks and the dang thing bounced. Okay. So the bank gives you credit for a check when you deposit it, but if it bounces, they take it back out. Okay. And they also charge you $35. So that's actually pretty expensive. Accepting checks can be very expensive. So, bounce checks they incur a pretty big fee. The person who wrote the check gets a fee. You for depositing the check gets a fee. So some banks are better about that than others, but I've gotten nailed twice on that in the last couple of years because somebody wrote me a check or wrote my wife a check. She deposited the check bounced. Holy crap, $35 for the privilege of not getting your money. Banks. Okay, but we want to add this back, or we want to correct our book. So we're going to subtract any NSF checks, okay, because we reported that $72 when they gave us the check, we reported it as cash, and now we're going to have to report it as taking it out of cash. We would actually create an accounts receivable with it, but that's a separate transaction. Okay, so the bank just let us know about that. Now, there are $800 in outstanding checks that the bank doesn't know about, but that'll go over here. Whatever the unadjusted bank balance is, the bank statement says, okay, whatever it says, they didn't tell us that, so I just put some question marks. But we know that we add deposits in transfer or in transit. All right, and that's simply the bank hasn't gotten them yet, or they hadn't gotten them by the time they sent us a bank statement. And then we want to subtract outstanding checks. We've written checks, but they haven't gotten to the bank yet. We wrote it to somebody, put it in the mail, and it's still in the mail. It just hadn't gotten to the bank yet. All right, so whatever the bank statement is, the true cash balance from the bank statement ought to be question mark plus 950 minus 800, so that'd be plus 50 bucks. That's the true or real. Again, I don't like accounting terms. The actual cash balance. That's how much money we really should have in the checking account, how much I can write a check for. All right, and then according to the bank statement, service charge, we want to subtract service charges. And the bank collected, okay, so got that. Service charge was 50 bucks. And they collected on a notes receivable. That means somebody came in and paid the note receivable to the bank. The bank collected it for us. Okay, add the paid off note receivable and add the interest on the note receivable. Now, I'm setting that as two different lines because in the accounting books, you'd keep track of them separately. Paying off the note receivable, we lent somebody 800 bucks, and when they went into the bank and paid it off, they paid it to the bank and just deposited a check with the bank. That's 800 bucks, but that's returning us our money. The profit part is the $13 of interest. Okay. So if I were to add all this junk together, that's what 8441 ought to be, how much I've got that I can write checks on going forward. Okay, so 8441 ought to be the true cash balance.